Gareth Soloway back with us today. Last time he nailed that 1979 gold parallel with the 9-week streak and the healthy shakeout we just saw. And Bitcoin now mirroring that retrace by wiping out its 2025 gains in this liquidity crunch. It feels like the de-risking playbook Gareth outlined is unfolding right before our eyes. Gareth, welcome back to the show.
Oh, thank you so much. It's so good to be back and talk markets with you.
Absolutely. Well, look, let's start with Bitcoin, down 27% from that October high, testing 6-month lows below 93,000 and fully erasing its 2025 gains. Now, as we're speaking this Tuesday, it's picked up a little bit, but I'd love to just go over Bitcoin with you again because you had warned us. You had warned us that Bitcoin could be in a danger area here.
Yeah, and this is really where people have to separate the technical data-driven approach of investing with the hype, right? I mean, you go on social media, you hear mainstream media, and it's all about the upside that will never stop. And in reality, things like to pull back along the way. And I think that's what we're seeing on Bitcoin. And so one of the most amazing things, and this is the simplest trend line I have on Bitcoin, takes us all the way back to the 2017 bull market high right here. Just
Right.
connect that through the 2021 bull market high right there. And it literally told us each time Bitcoin tested this line, it got rejected. Obviously, the latest time here with a big move to the downside. And I actually don't think it's over yet. I do think we're due for a bounce. Bitcoin is oversold. So I'm looking for a bounce back maybe towards 100,000. But I still think we have downside to about 73 to 75,000 per the
Okay.
chart. So and let me just show you there. So it's important for everyone to understand it's not just arbitrary numbers, right? If we look at Bitcoin, we have all of this consolidation, which was in March of 2024 through all the way into September before a breakout. Notice how it was resistance along here, and then it became support for its springboard up there. That tells me we should see a pullback in that zone. It's also a 50% retrace of the bear market low to the all-time highs around 73 to 74,000.
Gareth, let me ask you that $73-$75 call, if should we see it, would happen within what time frame?
I would say by end of first quarter 2026. I'm a little skeptical that we'll see it into year end unless the stock market really continues to tumble significantly. But I would say within the first 3 months of 2026.
What do you say to obviously, the Bitcoin crowd doesn't like hearing that, Gareth, and they say, look, it's not about the price action. We all know it's the hash rate, hash rate, hash rate. What's your response?
My response is in the near term, price is dictated by emotion, meaning greed and fear. And therefore, fear is the most pervasive emotion we have, and it's going to trigger selling. So if we have de risking, if fear comes in, then you're going to see Bitcoin fall. Now, over the long term, everyone's absolutely right. That's the fundamentals. Fundamentals are a long term indicator. And I do agree, and I'm bullish on Bitcoin longer term. But near term, you got to flush out some of the weak hands. We got to get a little fear or more fear in this market and bring it down a little bit more.
Um, Actually wanted to talk. I didn't. I know I didn't mention this to you, but do you mind if we pull up Ethereum also because the 5-day chart wasn't looking good?
Absolutely. Here's our ETH chart. I already have it annotated out
Yeah,
because I've been looking at it myself, and I've really
yeah.
been looking to buy as a swing trade right around this 28 to $2,700 level. We can see there's a parallel connecting the highs. It connects this little low that would give us technical support here, and same sort of deal right in this zone. A lot of support around 2,700 to 2,750. Now, please understand for me, if I buy here, it's a swing trade. So my outlook is, a few weeks to a month or so, I'll get a good bounce, maybe 10, 15%. And then I probably move to the sidelines to kind of analyze the price action. Longer term, Bitcoin for sure for me is a bull. Ethereum and the other alts are a little murkier because you're always seeing a new coin coming out that has better technology or better things, right? And so it's just a little hard to pick the altcoins. Ethereum's been the queen, if you could, versus the king Bitcoin for a long period of time. But we have to admit that Solana is coming up behind it, and there is some positives to the Solana network as well.
Do you want to pull up Solana for us?
Sure, absolutely. Let's
Let's
take
give
a
the
look.
folks a treat.
Oh,
A
so and
gift.
just full and fair disclosure, I picked up with my service. We went long Solana yesterday based on right here, this little pivot low right here. You can see it broke down from this longer trend line, so it's now in a downtrend. But really, we should see a good bounce. We're already in the money nicely here. I'm going to look for a move back to at least 155 to 156, maybe upside a little bit further. But short term, you can see again this pivot low, and look at how beautifully it's bouncing today to the upside on
Yep.
SOL.
We'll jump right back to the interview, but this is too important to skip. The real risk today isn't just a market crash or recession, it's the US dollar being reset, revalued, and losing all purchasing power. Prices keep rising, incomes can't keep up, and central banks around the world are buying record levels of gold because they see what's coming. You can't fix the system, but you can step out of the line of fire and position yourself the same way they do, like a central bank, not a common investor. That's why we built the Private Wealth Playbook. It's free and it shows you exactly how to protect your wealth, privacy, and retirement through whatever comes next. So click below or go to dannyreport.com and secure what's rightfully yours. Let me ask you before we move on to gold, getting back to Bitcoin and to the sell-off that you see in the charts. How is that correlated, if so, to what you see in the S&P? We often speak about how they trade in tandem and whatnot. If there's a sell-off in stocks, we see that sell-off in Bitcoin. So if you're seeing 73, 75 in Bitcoin, what does that mean for equities?
Yeah, it means there's a lot more downside in equities, right? So we're probably talking about at minimum a 10 to 11% S&P correction here that we've already started, and then likely we're going to see a 15+% in the Nasdaq. Now we're already in that free fall zone, but I'd love to show you this chart of the S&P, and this is what let me basically call the last time I was with you. I said
Yeah.
this is something that's very concerning to me. This parallel on the charts. And you can see here, this goes back to 2020. This is the COVID low. These are the bear market lows of 2022. And this is your liberation sell-off tariff low. And look at how it all aligns in a perfect line. And if you drag a parallel right up to the bull market highs of 2021, look at where the market's topped out right at that line. And I'm always in the camp of, we all have our personal biases, oh, the markets can really go higher or lower. But in reality, the charts are the only way I get odds in my favor, the
Yeah.
probabilities. And right now, that to me is a top until proven otherwise on the markets.
Right. Well, what people always go back to is that April sell-off, and so many people had given up on equities at that point, and then it came back roaring louder,
Right.
right? Um, but that's not always going to be the case, to
It's
your
not
chart's
always the
point.
case, and I think that's something that listen, there's a lot of new investors that have come in this market since 2020, right? In fact, a lot of the younger generation stayed away from investing until they were home with nothing else to do for months and months and months in 2020. We have this whole new generation of investors in that think that V bottoms are normal, that you drop 20% and in a month or two, you're back at all-time highs. I'm old enough from the 1999 collapse of the dot-com bubble, the 2007, 2008, 2009, to know that there will be a bear market that drags on for long periods. And my fear is that the AI trade has now topped out. There are so many issues starting to run up here on the AI trade. And I do think we're at a verge or on the verge of a big 40% drop in the SMH.
Wow. A 40% drop.
Yep. Yeah, and take a look. I'll show you. Let me show you. I bring the data, right? It's
You
like
do.
lots of people out there, they just spit out stuff. I always try to back it up because I think the viewers deserve that, right? I mean, it's not just an arbitrary statement. So this is your chart of the SMH, the semiconductor, the VanEck Semiconductor ETF. It tracks basically all of the semis, NVIDIA, Broadcom, etc. in it. This is your weekly chart. Now, what I was studying here is this is your weekly 200 moving average. And I said to myself,
Mm-hmm.
I wonder percentage-wise, how far do we get away from home base, which is a moving average, before we pull back to home base? And so I took my measurement tool here and I said, okay, here in 2021, we had a high. Let's do a measurement from the 200 moving average to the high, about 103%, right? 102, 103%. Then let's see how far away in 2024 we were before we corrected. We drag it up, basically 102%. And so I said to myself, that's kind of weird. So basically, we were above 100%. And then in 2021, we saw a 45% drawdown in the semis. In 2024, we saw a 40% drop in the semis after being 100+% up. And I said to myself, okay, well, where are we now? When we made our all time high in the semis a few weeks ago, how far away were we? And look at this, 102% above.
Wow.
So what we're seeing here
Wow.
is that the data shows us that when we get this far away from our 200 weekly moving average, there tends to be a drawdown. And if we just average these last two drawdowns, you're basically in the
Yeah.
40% pullback range.
Okay, so you would avoid this like the plague for now, but if you have that 40% drawdown, are you a buyer?
Yeah. Oh yes. Oh yes. Yes. As I do think
100%.
the AI narratives are legit. It's just they've gotten way too ahead of themselves. And there honestly, there's been some funky things that have kind of been playing out in the AI space, right? So for instance, valuations, they're factoring in, stocks are factoring in where their revenues are going to be in 2030. So they're already pricing in the stock as if they're getting those revenues that they won't get till 2030. The money being shuffled back and forth between these AI stocks is definitely concerning. Nvidia gives OpenAI $100 billion. OpenAI buys $100 billion in chips. This kind of back and forth is very concerning. And then you have other things that are starting to emerge that people aren't talking about, like data centers are being put on hold. So we know about all these data centers that are being built, but Micron put one on hold recently. Microsoft put two on hold. And the reasons they're giving is that there's literally no energy to power these things. They take so much energy that unless you and our bills are going to go triple, quadruple for electric, then they would power them. But they're not going to let that happen. The politicians would never let us pay triple the rates just to power data centers, which then will turn around and take our jobs anyways, right? Um, so last thing I'll say, hyperscalers, keep in mind they're using a depreciation rate on chips of 7 years. The data shows in 2 years, a chip, an AI chip goes from 100% value to 10%. So the depreciation is being underestimated dramatically by the hyperscalers, which means they're overestimating their profits.
Good point there, Gareth. I want to now shift to gold, where that post all-time high retrace you warned about feels like the perfect setup for the bigger move. Are we there now? I asked you this because, look, you've been really right on the money when it comes to the yellow metal. What are your charts telling you right now?
Yeah, so for me, I'm looking at the charts here, guys, and really what we're seeing is a short-term high in gold. And I still don't think the selling's all over. I still think that there's too many weak hands. The charts are still too overbought. And I'm really looking for us to kind of, you can see how we've had the big fall here in the first portion of October, and then we had a good bounce, but it's starting to come back in. And what I'm watching for is I want to see which way does it break. Do we break this line or this line? If we break around 42.50, we should test and make new all-time highs. I'm in the camp we're going to break below 38.90 or so and see a drawdown to about 3,600 to 3,500, which is actually the pivot high right here of all of this consolidation range, right? So this is where we broke out to the upside and then ultimately, again, a retrace back in. I think, again, we're going to come down to 3,600, and then we're going to push next year to 5,000 plus.
Okay, so you see 5,000 next year. I mean, I just had Chris Vermeulen on who says we could hit 5K by year end.
Yeah, I mean that would be amazing in gold. I don't see it right now, but I do see it in 2026. So again, I think that overall, 2026, we will see it. And I think it's important to understand that we have the differences here, right? So in 1979, when we topped out going into 1980, we had Volcker raising interest rates. We now have the Federal Reserve cutting, Powell cutting rates. We have jet debt to GDP in 1980, it was about 32%. We now have it at 130%. And so there are big differences. You brought up the similarities between 1979 and the top, and you're right on that. And that's what we talked about last time. But it's important to remember that's a short-term pullback. And then I do think the situation is different this time, where we will see these new all-time highs much quicker than obviously what we saw in the 80s.
And how much of that has to do with everyone's pointing the arrow to that QE is going to ramp up more than Bernanke's era?
So I do think QE is coming back, but I don't think it will be as aggressive as, for instance, COVID. Even during the great a financial crisis, because I
Okay.
do worry that inflation is going to make it tougher. And that's going to make it harder on risk assets, because we really rely on this printing of money, of flooding the system with money to push up asset prices, right? If you want stocks up, print more money, right? If you want gold up, print more money. And I do think gold's going higher, but ultimately the inflation needs to come down more if they're going to do that.
Hmm.
And I'm not convinced that we're going to see inflation coming down until we're in a steep recession.
Moving on to platinum, which many would say is the forgotten metal. Why am I bringing up platinum to you, Gareth? Well, I just came home from the Precious Metal Summit in Zurich, where I had a wild, it is in fact wild panel with Dr. Mark Faber and Grant Williams, and we'll post that on this Friday. But he loves platinum, loves it. He's hoping to create a platinum squeeze. And I was like, well, what are Gareth's charts showing about platinum these days?
So I also like platinum and I like palladium. I love the rarity of them, being they're even rarer than gold. Obviously, they're not prized by investors or collectors or gold bugs quite as much as gold. But when you're in a system where the money printing is likely just going to continue ad nauseum, how do you not
Yep.
go for a rarer metal like platinum and palladium versus gold? And I think a lot of people don't think that, right? The average person thinks, oh, well, gold is priced more, it must be rarer. It is not. It just has a bigger fan base, essentially. So looking at the chart here, we did slam into this resistance here in from 2012, and that's what we're retracing off. But I agree. I think platinum's going a lot higher in the coming year to years. And we could really be looking at, once we break above this 1730 level, I think you have a good shot of tagging that 2300 level as early as the end of next year. So I don't know if I'm as bullish as your other guest, but I also
Yeah.
believe that
I-
there's upside here on this and on palladium.
Yeah, I mean, I guess just comparing it to gold, just to get back to your point, Gareth, is that gold has wealth preservation on its side. I mean, do you look at platinum for wealth preservation is the question.
Right. And I think the key is that if Bitcoin can become a store of value because there's a limited supply, then couldn't
Well,
platinum and palladium
th-
also be, because there's a limited amount that
that's
can be mined?
you know what? That's a great argument you're bringing up.
Yeah.
I
That's the
feel
way
like
I
we
view
need
it.
yeah. Yeah,
And I
that's a
think
really
and I
good
think
point.
it's one of those metals that are a sleeper, right? Because if you look at it compared to the run on gold, it is lagging by a mile, yet it's even rarer. And so I think as we see what the Fed is going to do and the government spending, and realistically, I'm hearing more and more analysts saying the only way out of the debt that the US has is to basically weaken and continue to print more money. It just makes me want to diversify away from dollars. And I wouldn't be surprised if we start seeing central banks saying, okay, we've accumulated a massive amount of gold. Now let's start putting at least a portion of platinum and palladium in our reserves as well.
Wow. Okay. Different angle. We don't know how it will play out, but we will keep on top of this platinum story. Do you want to say a few words on silver? Because there was so much enthusiasm in the room in Zurich for silver.
Understandable, understandable. So number one, silver's always like that, right? It always gets people so hyped up because it's a cheaper metal, but it still has these monstrous runs. Now, the big thing on a technical perspective here is this chart, which goes back to 2008, right? So here we have a chart where is the huge parallel. It goes back to the financial crisis low and the COVID lows. And if we drag a parallel up to the bull market high in 2011, look at where we topped out twice now on silver, right at
Yeah.
that line. Boom, it slammed back down. Now, I am still bullish longer term, mid to longer term. I'm absolutely bullish. But if you're someone who didn't buy any silver, I think it's going to pull back more here. I think we go down towards the $40 per ounce level. And then the next wave up, it probably breaks above this and heads quite a bit higher.
Gareth Soloway, you know we're going to bring you back for our Outlook series, but just final thoughts for investors right now until mid-December till we bring you back.
Yeah, so I think just be aware that at some point time is up for the market. Valuations, problems in the economy continue to mount. We've obviously seen the government shutdown. Now it's back on. But if you look at, I think the biggest thing to me is that if you look at the population in the US and in most countries, there's about 70% that are struggling right now because of inflation and they weren't invested heavily in the markets or aren't invested heavily. versus everyone else who's still spending because they've had all these gains in stock markets. And once the stock market stops going up, that's going to be where those spenders, those consumers pull back. And once they pull back, the economy goes south very, very quickly. So I do think I'm still in the camp that we're due for a recession. It's been a long, long time since we've really had one that wasn't Fed induced by raising rates. And I do think we're at a point where we will see one soon.
I just want to bring up one other point to you, Gareth. I thought of you while I was in Zurich because there was a lot of talk about Tether, and I know we briefly touched on Tether, but they are aggressively going after the gold market. I mean, they just hired, I don't know if you saw that news headline, a top HSBC gold traders to take on the bullion market. I've spoken to people who tell me, Tether gold is going to be way bigger than Tether the dollar. Any other thoughts or anything else you're hearing about Tether?
So not a whole lot right now, but I've heard the same things you are, that they're buying a ton of gold right now. And again,
Yeah,
you wonder again, they're supposed to be this stable coin company that basically is buying dollars and backing everything with dollars. And even they don't have the confidence in the US dollar to be doing just that. And so I think it just brings up the point that we as investors must take control of our financial destiny and diversify. Diversify is everything in this world. And again, whether it's in regular life or investing life, it's better to be diversified so one breakdown does not end up ruining you financially.
I mean, let me just one more point, because as we're speaking, the whole Cloudflare thing happened this morning, where many people weren't able to access their X accounts and etc. So many websites down. Do you think that just adds, clout to the gold camp when they're like, look, that could happen to Bitcoin, that all of a sudden you just have the system shut down?
100%. And don't think that as Bitcoin becomes more valuable, that it's not going to even have a bigger target from governments around the world, whether it be North Korea or some of these other kind of rogue governments, to disrupt the financial system. I mean, it is going to become a bigger and bigger target. So I think again, it just goes back that gold, silver, have some Bitcoin, have some other assets. Just be diversified, because you want to ultimately be ready for anything that can come
Yeah.
our way as investors. And if we have a little of everything, then we can handle everything.
And another point that came up during this conference, it was a fantastic summit, by the way, um, that I didn't think about, is how AI could possibly impact Bitcoin and how AI could create, Bitcoin down the line. Have you thought of that, Gareth?
Well, I certainly have thought about how supercomputers could mine Bitcoin, potentially breaking. I mean, even supercomputers, the way they're talking about them, literally no bank account that I have is safe, because it could go through so many possible password configurations that it could break in within a matter of minutes to any account that I
Right,
have. And again, I
right.
mean, these are things that, yes, how do you not want some physical gold on hand or silver on in these type of scenarios? I mean, hopefully there's better security that comes up, but what we know is rogue players, they're always ahead of the curve. Like, they'll come up with it, then we find a fix for it, right? And so you have to just always be prepared. It's a great point, Danielle.
Gareth Soloway, you can learn more from Gareth at verifiedinvesting.com. He does fantastic work. Gareth, I love having you on. Thank you for sharing your charts with us and your
Thank you
thoughts.
so much. It's always a pleasure.
And thank you for watching. More great content coming your way. Be sure to stay tuned and sign up to our show. Subscribe. We'll see you soon.